Hello everyone and welcome. You've seen the title and you've certainly seen the headlines. Elon Musk, arguably the most important technology figure of our time, has been issuing warnings about artificial intelligence for years, but lately his tone has shifted. It's moved from a philosophical caution to something that feels much more like an urgent. Final warning, he's worried about a Terminator. Like Future, yes, but he's also pointing to a much more immediate problem. The sheer speed and scale of AI development are creating bottlenecks and disruptions that most investors are completely ignoring. When a person who's building the future at Tesla, SpaceX and X tells you to be worried, it's easy to panic. It's easy to think the only options are to either sell all your tech stocks or chase the hype and pour everything into the latest AI model maker. But that's a sucker's game. As investors, our job isn't to predict the singularity. Our job is to build a resilient portfolio that can withstand and even profit from the volatility and disruption that Musk is warning about. The panic and the hype are focused on one question: which AI model will win? Will it be OpenAI, Google's Gemini, Meta's Llama, Anthropic? But that's the wrong question. When Elon Musk warns about AI, he's warning about a force of nature, a new industrial revolution. And during a revolution, the safest and most profitable investments aren't always the revolutionaries themselves. They are the companies that provide the essential infrastructure, the picks and shovels. Today, we're cutting through the noise. We're not guessing which AI will win. We're identifying the companies that win no matter what. We're looking for the companies that are actually safe because they are the toll roads, the power plants, and the operating systems for this entire new economy. These are the three tech adjacent stocks that are truly built to last through the AI revolution. Our first safe stock is a company that provides the physical home for AI. This is the digital landlord of the new world, Equinix, ticker symbol EQXNO. You might be thinking, that's a real estate company, and you're right. Equinix is structured as a REIT, a real estate investment trust, but it doesn't own office buildings or shopping malls. It owns the most valuable real estate on the planet right now, data centers, over 260 of them, strategically placed in the most important global markets. Here is the core thesis, and it's incredibly simple. Artificial intelligence does not live in the cloud. The cloud is just someone else's computer, and that computer lives in a building. AI models, particularly the large language models everyone is talking about, are beasts. They are not like running a search query. Training a model like GPT-4 requires thousands of high-performance GPUs clustered together, running at full capacity for weeks or months on end. This hardware generates an astronomical amount of heat and consumes an unfathomable amount of power. You cannot run this hardware in your garage. You can't even run it in a standard corporate server room. You need a specialized, secure, high-density facility with industrial-scale cooling and a direct, high-capacity connection to the power grid. That is what Equinix provides. Why is this safe in the context of Musk's warning? Because Equinix is a neutral party. It is the Switzerland of the AI wars. Think about it. Amazon Web Services, Google Cloud, Microsoft Azure, Oracle, Meta, they are all in a cutthroat war for AI dominance. But where do they deploy their hardware? Where do they connect to each other to create the fast, low latency internet we rely on? They do it inside Equinix data centers. Equinix is the physical meeting point for the entire internet. This creates a powerful picks and shovels dynamic. During the gold rush, the most consistent fortunes weren't made by the prospectors who might or might not find gold. They were made by the people selling the picks, the shovels, and the land. Equinix doesn't care if Google's AI beats Microsoft's AI. It wins either way because both companies need to lease more space, buy more power, and install more servers in Equinix facilities to compete. The demand is non-negotiable. This makes Equinix anti-fragile. The more intense the AI competition becomes, the more demand there is for its services. This isn't a speculative bet on a new technology. It's a bet on the physical, non-negotiable need for data, and that is one of the most powerful secular trends of our lifetime. Furthermore, its moat is physical. You can't just decide to build a competing data center. You need billions in capital, years of permitting, and most importantly, you need to be located right next to the major fiber optic trunk lines. Equinix has spent decades acquiring the best locations. This creates a network effect. Data wants to be close to other data. The more carriers and clouds that are in an Equinix building, the more new customers must be in that same building to connect to them. It's a virtuous cycle. As a REIT, it's also obligated to pay out most of its taxable income as dividends, providing a stable cash flow return. You get the stability of a landlord with the explosive growth vector of the AI revolution. It's the definition of a safe way to play a volatile theme. If you're finding this kind of deep dive analysis valuable and it's helping you see the market in a new way, do me a quick favor and hit that like button. It's a huge help to the channel and lets me know you want more content just like this. So Equinix is our physical infrastructure, our digital real estate, but those data centers have a massive looming bottleneck. It's the one thing that could stop this entire revolution in its tracks, and it's something Elon Musk himself has explicitly warned about: power. This brings us to our second safe stock, Nextra Energy, ticker symbol NE. This might seem even further afield than a REIT, but follow the logic. Sam Altman, the CEO of OpenAI, has stated that the future of AI is bottlenecked by two things: chip supply and energy. We are solving the chip constraint. The energy constraint is the real crisis. Elon Musk said the same. He predicted that within 2 years, we will move from a silicon constraint to an electricity and transformer constraint. Let's put this in perspective. A single Google search uses about 0.3 watt hours of electricity. A single query to an AI model like ChatGPT is estimated to use 10 to 100 times that. Now, scale that to billions of queries, scale it to models being trained 24/7, scale it to entire industries shifting their workflows to AI. The demand for electricity is not just growing, it's going vertical. We are about to see a demand surge for electricity that no one has modeled, and the US grid is already strained. This is where Nextra Energy comes in. Nextra is not your grandfather's utility company. It is actually two businesses in one, which is why it's so brilliant. First, it owns Florida Power and Light. This is its regulated utility business. It provides power to millions of customers in Florida, one of the fastest growing states in the US. This side of the business is the safety cushion. It's incredibly stable, predictable, and generates massive, reliable cash flow, just like you'd expect from a classic utility. This provides a strong floor for the stock and funds its dividend, but the second business is the growth engine, Nextra Energy Resources. This is the world's largest generator of renewable energy from wind and solar. It's also a leader in battery storage. Here is the AI thesis. This new massive AI-driven demand for electricity must be met. But at the same time, every single one of these tech giants, Google, Microsoft, Amazon, Meta, has public, ironclad commitments to be carbon neutral or carbon negative. They cannot just go and ask a coal plant to power their new data centers. It would be a PR and ESG nightmare. They are required to buy clean, renewable energy. Who is the biggest, most reliable, and most experienced developer of clean energy in North America? Nextra Energy. Nextra is in the perfect position to sign massive, long-term power purchase agreements, peppers with these tech giants to build new solar farms and new wind farms specifically to power their new data centers. This isn't a speculative future. This is happening. Data center developers are their fastest growing customer segment. So why is Nextra safe? Because it combines the best of both worlds. It has the rock, solid, defensive, dividend, paying base of a regulated utility, FPL, and it has the explosive growth vector of a renewable energy leader, NEA, that is directly solving the single biggest bottleneck in the AI revolution. Musk is warning of a power constraint. Nextra Energy is the company building the solution to that constraint. It benefits from the AI boom without taking on any of the risk of which AI model wins. it just sells the power. It's the ultimate picks and shovels play, or in this case, the picks and power play. This is the kind of second order thinking that smart investors use to protect themselves. And if you want to stay ahead of the curve and get more insights like this, make sure you are subscribed to the channel with notifications turned on. We drop deep dives like this every single week, and you don't want to miss the next one. We have our physical infrastructure, the home for AI. With Equinix, we have our power infrastructure, the fuel for AI with Nextra Energy. Now we need the final piece, the digital infrastructure, the operating system for the AI revolution. Or third, safe stock is Microsoft. Ticker symbol, MSFT. I know what you're thinking. Hold on, you said actually safe. You said cut through the hype. Microsoft is the hype. They own 49% of OpenAI. This is the least safe, most volatile stock on the list. And if you were investing in Microsoft only because of its stake in OpenAI, I would agree with you. That's a speculative bet, but that's not why Microsoft is on this list. The reason Microsoft is actually safe has almost nothing to do with OpenAI's future profits. In fact, it's the other way around. Microsoft is using OpenAI to cement its existing, unassailable, and incredibly boring moats. The safe case for Microsoft rests on two pillars, Azure and Office. Let's start with Azure, its cloud computing platform. Azure is the number 2 cloud provider in the world, in a global duopoly with Amazon's AWS. The AI war is first and foremost a cloud war. These giant models run on the cloud. What Microsoft has done is brilliant. It has integrated OpenAI's most advanced models exclusively into its Azure cloud platform. This means if you are a Fortune 500 company and you want to use ChatGPT level technology to, say, build a customer service bot or analyze your internal data, you can't just plug into the public ChatGPT. That's not secure. Your proprietary data would be sent to OpenAI. Instead, you use the Azure OpenAI service. This allows you to run those same powerful models inside your own secure, private Azure cloud instance. Microsoft has become the only secure enterprise-grade gateway to the world's most advanced AI models. It doesn't matter if Google's Gemini eventually gets better. Right, now every company that wants to deploy generative AI at scale is being funneled directly into Microsoft's highest margin business, Azure. They are selling the picks and shovels at the software level. But the second part is even safer, Office 365 and the Copilot strategy. What is the one piece of software that 1.6 billion people and virtually every corporation on Earth already run on? Windows and Microsoft Office, Word, Excel, PowerPoint, and Teams. This ecosystem is the single stickiest product in business history. It is the operating system of work. Companies spend decades and billions of dollars building their entire workflows around Excel. They cannot leave. Now, what is Microsoft doing? It's not creating a new, separate AI product that has to fight for customers. It's embedding AI directly into the products people already use and pay for. This is Copilot for an extra $30 per user per month. Microsoft is adding an AI assistant inside Word, inside Excel, inside Teams. This isn't a replacement, it's an upgrade, a high margin add. Think about the power of this. Microsoft doesn't have to spend $1 on marketing to acquire a new customer. The customer is already there. They are just upselling them. They are taking their unassailable monopoly on enterprise software and using AI to make it even stickier and wildly more profitable. This is why Microsoft is safe. Its safety doesn't come from the speculative gamble on OpenAI. Its safety comes from its locked-in, non-negotiable enterprise customer base. Musk's warning is about disruption. Well, Microsoft's core business is perhaps the least disruptable business in the world. It is using the disruptive force of AI not to compete, but to reinforce its own fortress. It is the ultimate toll road. You want to do business in the 21st century, you have to pay the Microsoft tax. And that tax just went up thanks to AI. This reframing is so critical. If this analysis changed your perspective on Microsoft or the AI landscape, consider sharing this video with a friend or colleague. It's the single best way to support the channel and help others think like a long-term investor, not a short-term speculator. So there you have it. Elon Musk's final warning isn't a reason to panic, it's a call to action. It's a signal to stop chasing the hype and start thinking about the fundamentals. Instead of gambling on which AI model will win, we invest in the infrastructure that all of them need to function. Equinix, Equix. The physical home for AI, the digital landlord that houses the hardware for all competitors. Nextra Energy, NE. The fuel for AI, the power company that is solving the #1 bottleneck to AI's growth. Microsoft MSFT, the operating system for AI, the software giant that is using AI to make its unassailable enterprise moat even stronger. These companies are safe not because they're boring, but because they are essential. They are the digital plumbing, the power grid, and the core software of this new revolution. They provide the resilience your portfolio needs in the face of the very disruption Musk is warning us about. But that's my analysis. Now, I want to hear from you. What do you think of these 3 picks? Are there other safe AI adjacent stocks on your radar that I missed? What infrastructure plays are you looking at? Let me know your thoughts in the comment section below. I read every single one. Thank you for watching. Stay sharp, stay resilient, and I'll see you in the next one.